Every year, millions of people make the same $100,000 mistake, and they don't even realize it. It's not about spending too much or saving too little, it's about where they put it and how long they let it sit. That one decision separates comfortable from financially free. So what would actually happen if you took $100,000 and put it to work the right way today? In this video, I'm running that exact experiment across 5 of the best Vanguard index funds. I'll show you and John how your money grows inside each fund, from the entire US market to pure technology. I'll show you an index fund that pays over $80,000 in annual dividend income, and in the end, I'll show you the top pick that can turn a single one-time investment of $100,000 into a $13 million portfolio. But before we dive into the results, let's get a quick sense of why these 5 funds stand out in the first place. Selecting the right Vanguard index funds isn't about chasing popularity or the biggest recent gains. It's about finding a balance between performance, risk, and long-term reliability. The 5 index funds in this list are chosen using clear criteria: consistent historical growth, healthy dividend yields, strong 1, 5, and 10-year performance, and exposure to sectors built for the future. They form a complete picture of the U.S. market, from broad diversification to focused innovation. Each index fund represents a different layer of strategy. Some capture the entire economy's movement, others target specific areas where growth often outpaces the average. With those principles in mind, let's begin the countdown. Coming in at number 5, we've got a fund that captures the entire heartbeat of the American economy. The Vanguard Institutional Stock Market Index Fund with the ticker symbol VITPX. Now, this isn't a fund that tries to predict winners or outsmart the market. It simply mirrors it. Every rise, every dip, every recovery. The whole story of U.S. business in one place. Inside, you'll find more than 3,000 companies, from household names to thousands of smaller firms quietly building the next big thing. VITPX tracks the CRSP US Total Market Index, which basically means your money is spread across nearly every corner of the economy. Around 32% of it sits in technology, 14% in financials, 11% in consumer cyclical, about 9.5% in healthcare, and another 9% in industrials. That mix makes it one of the most balanced ways to own a piece of the entire U.S. stock market. And of course, the heavy hitters lead the pack: NVIDIA, Microsoft, Apple, Amazon, Meta, Broadcom, Alphabet, Tesla, and Berkshire Hathaway. Together, they make up roughly a third of the fund. The rest is spread across smaller and mid-sized companies that help keep things stable and dynamic. Performance-wise, it has a history that speaks for itself. Over the last decade, VITPX has returned 137.67%, with 45.98% growth in the past 5 years and 11.17% over the last 12 months. Not bad for a fund that doesn't try to time the market. And because it's Vanguard, efficiency is baked in. The expense ratio is just 0.02%, which means for every $100,000 you invest, you'll only pay about $20 a year in fees. The fund also barely trades, with only about 4% turnover each year. In plain English, that means they buy and sell very little, keeping trading costs and taxes super low, so more of your money stays invested and keeps compounding. Now, let's look at the numbers that make this index fund so compelling. VITPX currently pays a 2.4% dividend yield, with dividends growing at 10.04% a year for the past decade. On top of that, the average annual share price has appreciated by around 9.11% per year. So what does that mean for your $100,000? Well, after the first year, your portfolio will be valued at around $111,510. In 10 years, that investment is projected to reach about $300,017. After 20 years, it could grow to roughly $919,872, and if you stay invested for the full 30 years, that same $100,000 is projected to reach $2,888,262. By that time, your portfolio will be paying around $80,771 per year, or about $6,731 every month in passive income. Out of that total, roughly $2.1 million will come from capital appreciation, while another $680,107 will come from reinvested dividends, bringing your total value added to around $2.78 million. At number 4, I have one of the most active corners of the market, the Vanguard Consumer Discretionary Index Fund with the ticker symbol VCDAX. This fund thrives on a simple idea. When people have money to spend, these companies grow. It represents the strength of consumer confidence, focusing on brands that benefit from lifestyle choices, entertainment, travel, and personal spending. VCDAX tracks the MSCI US Investable Market Consumer Discretionary 2550 Index, which gives you a focused look at all the companies shaping modern spending habits. About 96.66% of the fund sits inside the consumer cyclical sector, businesses tied to lifestyle, entertainment, and personal spending, with small portions in consumer defensive, tech, and industrials. The top holdings are names we all know. They include names like Amazon, Tesla, Home Depot, McDonald's, and Starbucks, etc. Together, the top 10 holdings make up roughly 57.54% of the total portfolio, which is on the higher side, a clear reflection of how a few dominant brands capture most consumer spending power. Now, this focus has really paid off over time. Over the last decade, VCDAX has returned about 204%, with 50.79% growth over the past 5 years and 12.77% in the last year alone. And like most Vanguard funds, it is built for efficiency. The expense ratio is just 0.09%, which means a $100,000 investment costs only $90 a year in management fees. Turnover sits at about 6%, meaning the fund trades very little, keeping your taxes and costs low. Here's how it breaks down by the numbers. The current dividend yield is 0.75%, and dividends have been growing at about 5.54% per year for the past decade. But the real engine here is price growth. The fund's share price has appreciated roughly 11.79% per year on average. So what could that mean for your $100,000 investment? Well, after the first year, your portfolio will be valued at around $112,540. In 10 years, it's projected to reach about $320,731. After 20 years, it could grow to roughly $1,004,109, and if you hold on to it for 30 years, that same $100,000 may be worth a solid $3,103,871, paying around $3,201 per year in dividends. Out of that total, around $2.95 million will come from share price growth and another $51,576 from reinvested dividends, bringing your total value added to roughly $3 million. These are solid returns, no doubt, but there are even better options to come. A fund that can turn a $100,000 investment into an $8 million portfolio, and in the end, I'll show you the top pick that can turn that same investment into a $13 million portfolio. All right, back to our list. At number 3, we've got one of the easiest funds to recommend in investing history, the Vanguard 500 Index Fund with the ticker symbol VFINX. This is the fund that made index investing famous. It tracks the S&P 500, which includes the 500 largest companies in the United States. Together, they represent roughly 80% of the entire U.S. stock market. When you invest in this fund, you're basically buying into the backbone of the American economy, the companies shaping technology, healthcare, finance, and innovation every single day. Inside, you'll find names that almost everyone knows: NVIDIA, Microsoft, Apple, Amazon, Meta, Broadcom, Alphabet, Tesla, and Berkshire Hathaway. These top 10 holdings make up about 38% of the fund, while the rest is spread across hundreds of other companies that quietly drive every part of daily life. It's slightly higher on one sector, about 34.8% in technology, but balanced across all other sectors, including 13.4% in financials, 10.7% in consumer cyclical, 10% in communications, 9.1% in healthcare, and 7.7% in industrials. That balance is what gives the S&P 500 its trademark stability. When one sector slows, another often takes the lead. And over time, that balance has paid off. VFINX has returned about 231% over the past decade, 85% over the last 5 years, and more than 13% in just the past year. It's built for endurance, not excitement, a long-term performer that mirrors America's progress. Whether it's a new iPhone release, a medical breakthrough, or a leap forward in artificial intelligence, chances are the company behind it is part of this index. With over $1.41 trillion in assets, VFINX has become the foundation of countless retirement portfolios and long-term wealth strategies. The expense ratio is just 0.14%, which means a $100,000 investment costs only about $140 a year to manage, and it has a very low turnover rate of just 2%. Now let's look at the numbers that really matter. VFINX currently offers a 1.07% dividend yield, with dividends growing at an average of 5.14% a year. Its share price has historically appreciated by about 12.76% per year. So if you and John invested $100,000 in VFINX today and simply let it grow, here's what the projections look like. After the first year, your portfolio will be valued at around $113,830. In 10 years, it's projected to reach roughly $355,669. Stay invested for 20 years, and you'd be looking at around $1,218,919. And if you hold for the full 30 years, that same $100,000 would compound into $4,107,585, paying close to $3,910 per year in passive income. Out of that total, roughly $3.94 million will come from share price growth, and another $67,228,000 from reinvested dividends, giving you a total portfolio value added of just over $4 million. At number 2, we've got a fund built around the movers and shakers, the companies driving the next big wave of innovation and growth. This is the Vanguard Russell 1000 Growth Index Fund with the ticker symbol VRGWX. If the total market funds represent stability, then VRGWX represents evolution, the next generation of industry leaders changing how the world works, shops, connects, and creates. This fund tracks the Russell 1000 Growth Index, which includes America's largest and fastest-growing companies. It leans towards firms that are expanding revenue quickly, scaling their reach, and dominating emerging industries. In short, it's designed to capture the heartbeat of progress. Inside the fund, the story is clear. It's heavily tilted toward the biggest names in technology and innovation. The top 10 make up almost 60% of the entire portfolio. The sector breakdown says it all, around 53% in technology, 13.5% in consumer cyclical, 12% in communication services, 6.7% in healthcare, and 6% in financials, with the rest spread across smaller sectors. It's a lineup laser-focused on innovation, growth, and transformation. Performance-wise, VRGWX has been one of Vanguard's strongest long-term performers. Over the last decade, it has delivered a 370% total return, with 100.5% growth in the past 5 years and 21.16% in just the past 12 months. It's a fund that thrives during periods of technological disruption. Basically, when the world changes, it benefits first. Even with that incredible performance, it remains extremely cost-efficient. The expense ratio is only about 0.06%, which means a $100,000 investment costs just $60 a year in fees. The turnover rate sits at 11%, which means the fund trades slightly more than the others, but not too often. The returns here tell a clear story. Dividends sit at 0.47%, with growth averaging 4.24% annually. But it's the share price that does the heavy lifting here, rising roughly 15.81% per year. That steady, compounding climb is what makes VRGWX such a powerful long-term growth engine. So if you invested $100,000 in VRGWX today and simply let it grow, here's what it could look like. After the first year, your portfolio will be valued at around $116,280. In 10 years, it's projected to reach about $444,861. After 20 years, it could grow to roughly $1,944,626. And if you give it the full 30 years, it has the potential to reach a massive $8,457,037. Being growth-focused means it doesn't pay much in dividends, but if you look at the total value added, it sits at $8.35 million, with the majority of it, around $8.33 million, coming from share price appreciation and only $20,899 from reinvested dividends. Finally, at number 1, we have the fund that captures the very core of modern innovation, the Vanguard Information Technology Index Fund with the ticker symbol VITAX. If there's one sector that has redefined the last 2 decades, it's technology. From artificial intelligence to cloud computing, from microchips to mobile apps, tech has shaped every corner of how we live, work, and connect. VITAX gives you a front-row seat to that transformation. It tracks the MSCI U.S. Investable Market Information Technology 2550 Index, which includes the most dominant names across hardware, software, semiconductors, and IT services. Inside, you'll find the leaders of global innovation. The top 10 make up about 57.7% of the portfolio. Nearly 98.35% of this fund is pure technology, with only tiny slices in communications, financials, and industrials. That concentrated focus means it can swing more in the short term, but over time, it's been one of Vanguard's most explosive long-term performers. And the numbers prove it. Over the past decade, VITAX has returned an incredible 620.66%, with 122.13% growth over the last 5 years and 22.97% just in the past year. It's powered by the same megatrends driving the global economy: artificial intelligence, automation, data analytics, and digital transformation. Even with that kind of performance, it's still efficient and low cost. The expense ratio is just 0.09%, which means a $100,000 investment costs only about $90 a year to manage. Because VITAX is growth-focused, it doesn't pay much in dividends, but that's the trade-off. You get exponential growth instead. And that's why its current dividend yield is just 0.42%, with a 10-year dividend growth rate of 10.34%. But the real driver here is price growth. The fund's share price has appreciated roughly 17.44% annually, and that's what fuels its massive long-term returns. So, if you invest $100,000 in VITAX today and simply let it compound, here's how it could play out. After 1 year, your portfolio will be valued at around $117,860. In 10 years, it's projected to grow to roughly $512,326. After 20 years, it could reach about $2,589,180, and if you stay invested for the full 30 years, that same $100,000 may grow to nearly $12,999,769, just a couple dollars short of $13 million. By that point, your dividends will be paying around $5,491 per year, or about $458 every month in passive income. Out of that total, roughly $12.84 million will come from share price appreciation, while another $60,550 will come from reinvested dividends, bringing your total value added to about $12.9 million. Want to know how to make $4,000 a month with only a $12 weekly investment? Click the video on the screen to find out.